Hello everyone, so we are back. I got a new haircut and let's get started, I guess. Okay, so this is the target profit question where there's also tax involved. So, first of all, as you know, whenever there's a tax involved in the profit you're trying to make, right? Like, because let's say I want to make a after tax profit of 50,000, I first need to convert it into before tax before I can apply the target profit formulas. So that's exactly what we're going to do here. You can pause the video and read the question and we will get started. So now I'm going to assume you have read the question. So let's get started. First requirement is calculate the target profit before tax. So of course that we would have done anyways, even if that wasn't a requirement. We have to do this to find the target profit in units. So we learned a formula in the last video to find the target profit before tax from the target profit after tax. The formula was target profit before tax, after tax divided by 1 minus tax rate. Okay, so in this one, if we plug in the numbers, what is the target profit after tax we want to make? We want to make a profit of 84,000. So 84,000 divided by 1 minus tax rate. So you can say 70% because tax rate is 30% and 1 minus 30% is 70%. And if we do this, we will find an answer of $120,000. So this means to earn an after tax profit of 84,000, I need to make a target profit before tax of 120,000. Okay, so once that's clear, now that we know how much target profit before tax we need to accomplish, we can do requirement number 2, which is to calculate the number of units we need to sell to make a target profit after tax, of course, right? So we will apply the target profit formula, which is, there we go. And just plug in the numbers. Again, in the target profit place, you have to put the target profit before tax, not the after tax. Otherwise, you wouldn't get the right answer. I hope that's clear by now. So, if we do fixed cost, which is $120,000, plus target profit before tax, which is also apparently $120,000, big coincidence here, divided by contribution margin per unit, which means sales price per unit, minus variable cost per unit. That's the formula we learned for the contribution margin per unit. So if you notice, the price is 50, variable cost is 30. That obviously means contribution margin per unit is 20. So if we divide the total of the above with the below, so 240,000 divided by 20, 12,000 units. So this means if the company sells 12,000 units, they will generate an after tax profit of 84,000, which is what our goal was. Okay, next requirement is to calculate the sales revenue, means dollar number, to achieve the target profit, not the units. It's not, now we don't have to calculate how many units we should sell. We have to calculate how much dollars we need to earn in our sales revenue. So again, let's copy the question. I hope you remember the trick. You can just multiply this by the sales price as well to get to do it quickly. But let's also do it directly with the full formula we learned without like this quick trick, right? So the full formula we learned is this one, to directly find the target profit in dollars. So the reason you need to know both formulas is sometimes one formula is applicable in a question, based on the details given. So that's why it's always good to know all of the formulas that you might end up needing. So fixed cost, which obviously is 120,000, plus target profit, again it has to be before tax, 120,000, divided by contribution margin ratio. If you remember, contribution margin ratio just means contribution margin per unit divided by the sales price per unit. So can I say 20 divided by 50, because contribution margin per unit is 20, sales price is 50. So if we solve this now, we should get our answer of, let's see, there we go. So this means we need to earn $600,000 in sales to to make the target profit of 84,000 dollars after taxes. There you go. So that's all the discussion you will ever need about target profit. Like either it's like a very easy question, there's not even a tax consideration, then you directly apply the formula, right? You don't have to convert the target profit into before tax because there's no such thing as tax in that question. But even if there's tax involved, I hope you can see it's very easy. You just have to do one extra step to convert the after tax profit into before tax profit, so you can apply the formulas in the usual manner. So I'll see you in the next video.